Welcome, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer, as a reference point. We expect you to do your own financial research and make your own financial decisions. Today is Sunday, June 20th, 2021, and this is Blockhead Traders Weekly. This week I have myself, Sprocket888, and I'm joined by fellow Blockhead trader Viper XL 007. And this week we are going to continue our series on how to begin trading with our fourth and final topic, which is going to be opening your first trading account. So in this episode, we're going to be looking at a couple of key factors to consider when you go to take that step in opening your trading account. We're then going to talk about a few of the most popular retail brokerage firms out there. Mostly we're going to be talking about the ones that both myself, Sprocket, and Viper have experience with. But before we hop into some of those topics, I want to give a shout out to our Discord that we run. You can find a link in the description below. It's an open and free Discord channel for anybody who's interested to hop in, say hi. It's a great way to interact with both myself and Viper. If you have any questions, comments, just say that you love our videos or hop in there and tell us that we're morons and don't know what we're talking about. Either way, we would be happy if you would go and engage us in the Discord. So to start out with funding your trading account, one of the kind of first things is, but how much money do I need? And my answer to that is, well, please go back and see episode 1 when we talked about a giant list of all the things that you should do before you get to this step of actually putting money in your account. So we're going to assume that you have done all those things back on episode 1. And if you're like, wonder what those things are, go back and watch episode 1 of this series. And I'm going to say you can really start your trading account with any dollar amount that you have. You can start with $100. You can start with $500. I personally don't think you really should start with much less than $2,000. It's entirely possible to start. However, when you're under $2,000 in your account, your options for trading things are going to be extremely limited, to the point where it doesn't mean that you'll have bad trades. It just means that you're more likely to run into personal engagement issues. You might not find it as interesting or as exciting, or you might find more frustration rather than other things, just based on the amount of choices that you're going to be limited to. So I would say that you really shouldn't consider funding your trading account until you have at least $2,000 to put into it. I personally started my very first trading account with $2,500. So it absolutely is possible with a small amount of money. The very first trades that I did were actually option selling trades. And so I was able to sell premium with a very small $2,500 account. Now, I couldn't do a lot of trades. I was doing, 50-cent wide iron condors. I was playing with underlyings that were, $10 underlyings. So again, not going to have a lot of choices, but it is 100% doable. In my opinion, kind of watching my account grow from that $2,500 when I first started through different tiers and capabilities and capital levels, I believe that kind of the sweet spot for that very first trading account is probably in the $5,000 to $10,000 range. In this range, you're going to be able to participate in a large percentage of trading strategies out there. Go back and watch our trading strategies episode, which came just before this one, to kind of get a feeling for what's out there in the world. But I would say that in a $5,000 to $10,000 account size, you probably can engage in, I would say 60 to 70% of the various trading styles that are out there uh, for you to learn and to participate in. And when you start crossing the $25,000 threshold of capital, this is really when the maximum flexibility is going to really surface. Once you cross 25,000, you're going to be opened up into scalping and day trading strategies. You're going to be able to do more premium selling naked instead of doing the option spreads and things like that. So really above $25,000, that's kind of the optimum flexibility. Uh, Beyond $25,000, the next real level will vary from broker to broker, but there's a thing out there called portfolio margin. And portfolio margin really has to do with how they calculate buying power that's used for various trading strategies and things like that. And for the most part, from $2,000 all the way up to the point where you qualify for portfolio margin, you're going to be under the same buying power restrictions and guidelines and rules. And once you cross portfolio margin, that's when you're going to kind of hit the next level of trading. And it depends on your broker where they draw that line. It's usually between about $125,000 account size to maybe $170,000 account size. So it's extremely unlikely that anybody that is just learning to trade is going to be starting with an account that size. But it is something to work towards. I personally am working towards obtaining portfolio margin on my trading account. I do not have that yet. And kind of the next point that I want to put in here with the initial funding of your account is make a plan to continually recurring add funding to that account. Not really because I think you're going to lose money and you'll need to refill it, but really one of the best ways to grow your account is not only from the compounding returns on your investments in the account, but it's continually adding money on a monthly basis and compounding that money in part of the trading account. And so, refer back to episode 1 where you're making a budget, try to carve out, $10 a week, $50 a week, $100 a week. Do some sort of regular recurring contribution to your trading account. And I think you'll really see that that reoccurring contribution combined with a good trading strategy that you're interested in will really start to grow that account. And you're going to hit, the 5,000 tier, the 10,000 tier, the 25,000 tier. And then, hopefully before you know it, you will be joining the portfolio margin as well. The next thing we want to kind of talk about, well, where do you open that trading account? And before we get into talking about different retail brokers that are out there, I want to kind of call out a couple of bullet points that start to differentiate brokers. And what I would say that you should do is, make a list on your own piece of paper that talks about all the different brokerage firms that you've heard about. Maybe you've heard of E-Trade, TD Ameritrade, Schwab, Robinhood, Webull, any of these different trading platforms, and just make a whole list of them and then start to read about each of them. And each one is going to have different touting things that say, we're good at this or we're awesome at this, and start to kind of map out the differences. I'm going to give you a couple points here that we're going to talk about that I think you should consider when you look at the differences in there. But really, it's all going to be about you looking through them and trying to figure out what's best for you. So kind of like our previous episode on strategies, there's really no cut and dry brokerage firm that is best for everyone, right? Each brokerage firm is going to offer its own little bells and whistles, and some of those bells and whistles will speak to you as a trader, and some of them you'll be like, I don't really care about that, and you'll not have value in it. And really, the best brokerage firm for you to use is the thing that most closely matches to your trading style So, the first topic, and probably the most important in my opinion, is fees and commissions. Yes, there are still fees and commissions. So, there are brokerage firms out there that say we have no fees, no commissions. That is true on some products, right? Most brokerage firms do not charge any fees or commissions on equities or ETFs. But if you start looking and look at how they price options, for example, you'll find out, oh, there actually are fees on options, or there are commissions, or, on futures. Oh, there's actually fees on futures. And some of them are imposed by the brokerage, and some of them are imposed by the market that you're trading on. All have a pricing page. So go to their pricing page and see exactly what their pricing is for all the different trading vehicles. In the trading strategy episode, we talked about the different trading vehicles. So make sure you're aware of what the fees and commissions are for all the different vehicles at the brokerage. The next thing out there is margin rates. So you can kind of think of this almost like a reverse savings rate. So you might shop around a particular bank or financial institution because they offer a good interest rate on your savings account or money market account or something like that. In the brokerages, they will offer margin rates, which is essentially a percentage that you owe the broker if you end up utilizing margin or trading on margin. Now, this is if you plan to use it. If you don't use margin, you never pay those rates. Kind of like a credit card, right? You have an interest rate on a credit card, but if you pay it off every month, you never pay that interest rate. So, if your trading style relies on margin, maybe margin rates are important to you. And that's something you should consider because the rate at which brokerages charge for margin rates actually varies quite a bit from brokerage firm to brokerage firm. The other variable to consider is what educational resources does that particular broker offer? Some of them offer nothing. Some of them offer very elaborate classes or webinars or subscriptions to extra resources where you can obtain more trading education and things like that. Another thing to consider are the access to the vehicles that you want to trade as part of your trading strategy. Some brokerages don't offer futures. Some of them offer very limited crypto. Some of them don't offer any crypto trading. And so kind of know what your strategy is and see how well the brokerage firm that you're looking at supports that strategy. Kind of along here, it's not really called out, but customer service. So it's really hard to research, customer service because they're all going to say they have the best customer service. But, start going to third party reviews and say, well, how is the customer service on this? Do you have to wait on hold for 3 hours to talk to a representative? Are representatives only available through chat? Is there a way to escalate to a person? Just kind of things like that. And kind of along that is outages. So, some brokerage firms have made the news in the past because they've had these significant outages where you absolutely can't trade. And if your strategy depends on that access to be able to trade whenever you need to get in or out of a particular share or a particular underlying, and you can't do it for an hour, for 5 minutes, for a few hours, how detrimental is that? Are there any SLAs, any agreements that say the brokerage firm will allow you to always have access via something, right? So these are things to all kind of consider when you start looking at all the different options out there when it comes to retail brokerage firms. The last one that actually is not on this list that maybe should is what is their main interface? What's their trading platform actually look like? What types of interactions does it have? Is it easy to use? Is it complicated? Does it have a lot of features? Does it, what does it actually look like? You might just have to try it. And most of these brokerages will let you open up an account with some of them zero money into it to get you access, and some of them might be $50 or something like that. And so maybe you want to compare two brokerage firms. Well, you toss $50 in two of them, check out the interface, check out the services and stuff, and then make your decision, and then fund the rest of your money through that, and close the other one if you want. Let's hop into a couple of retail brokers that are very popular. This list is primarily focused around brokerages that either myself or Viper have used, with the exception of Interactive Brokers. So I don't believe either one of us have had experiences with Interactive Brokers. First one, full disclosure, is my current broker that I use today for 90% of all my trades. I'll touch on the other 10% here in a second, but is TD Ameritrade. They have a particular platform called Thinkorswim. It is a very, very full-featured platform. I find it hard to find anything that it doesn't do. In fact, I'm pretty sure that there's nothing that it doesn't do. But it does everything, and so many things that I actually don't know about that it does. The interface, however, has an extremely steep learning curve. It absolutely, in my opinion, is not intuitive. There are lots of things in order to do certain actions. It's not intuitive, is all I can say. There is excellent help material available online in their support pages to really learn it. There are tons of videos out there teaching how to use it. So you can learn it. It does take time, and it is definitely not an intuitive interface, but it is extremely full featured. One other interesting thing, and maybe this is a point of comparison to bring to other brokerages, but what type of APIs do they have? So I'm myself a little bit of a computer nerd, and I like to do a little bit of my own kind of programming and scripting and things like that. And a lot of these brokerage firms do have sorts of web API that you can utilize for your own tools that you might be developing as a trader. And so the TD Ameritrade APIs are spectacular, in my opinion, relative to the APIs available in other brokerage platforms or even services that are focused around providing different trading APIs to people. The fees and commissions, well, they're not high. They're definitely not the lowest in the world of options selling and futures trading. So my trading volume is not quite to the level where I really feel reducing that is that important to my trading. I have read a lot of stories that if your volume is high enough, you just simply contact TD and tell them that you have high volume and you want lower commissions and fees, and they lower them. I don't have personal experience with that. I'm okay at the current levels that I pay for all of the services that they provide. They have very decent training and education resources, multiple webinars and things you can join. The next brokerage firm is Tastyworks. So I do have a Tastyworks account, and this is what about 10% of my other trading account is in. And the reason for that is Tastyworks actually has a platform available, or an exchange available. I shouldn't call it a platform. It's called the Small Exchange. And it basically came out in June of 2020, I believe. So it is a very, very new exchange. And multiple brokers are starting to pick up this exchange, and you can trade on the Small Exchange on an expanding number of brokers. However, TD Ameritrade was not one of those brokers that could trade on the Small Exchange. And the Small Exchange, which I will probably do in a future episode here outside of this, is basically futures trading, but not complex and confusing like the standard futures from that you would be used to out there in TD Ameritrade world. They've simplified futures, they've made futures smaller, And they've basically tried to create futures for retail traders. And so I only trade the small exchange in my Tastyworks account. The Tastyworks interface, as well as a lot of its focus, is heavily into options trading, primarily premium selling, but option buying is also really included in there. They are very low in their commissions. So compared to TD Ameritrade, they're about 30% lower when it comes to fees and commissions. They're not free, but it is considerably lower. The interface is a lot more modern than TD Ameritrade's interface. It is pretty intuitive to use. It's very visual. It's pretty decent for placing trades, closing out trades. However, the charting in Tastyworks is, in my opinion, absolutely abysmal. The charting capability, I think it would be better suited if they didn't even have it on their platform. They say they improve on it here or there, but basically you're going to be using a different charting mechanism if you use Tastyworks. They also have the education resources are phenomenal in the Tastyworks platform. They actually really engage in social trading, so they have a huge presence on Twitter, YouTube. They have their own channel of trading videos, learning, and resources. I would say their education is top notch. In addition to that, their staff of traders trade publicly in the platform, so you can follow your favorite trader, see what they're trading, when are they entering, when are they exiting in real time. So from that aspect, they're absolutely great and amazing. The next brokerage firm that I'm putting on here, because it is very popular for retail traders, they market towards a lot of retail traders, is Interactive Brokers. I personally have never used them. I also have not spoken to anybody that has used them. The reason I am putting them on here is because in the world of margin rates, they are hands down the lowest margin rates. I mean, no other brokerage comes anywhere close to the margin rates that Interactive Brokers can offer you. So I bring that up because if your trading style relies on good margin rates, Interactive Brokers might be your guy because their rates are just not even in the same ballpark as anyone else's margin rates. And the last brokerage that I'm going to put up here is one that I personally haven't used, but I know Viper has used in the past. And it is very popular with brand new traders. It's Robinhood. It's also been in the news, so you've probably heard of it. They are famous for having no fees or commissions. You can download the app and have an account, I believe, pretty much instantaneously. One thing to call out is you can't trade futures on Robinhood. So, going back to that, is the vehicle that you want to trade available with your brokerage? In the case of Robinhood, futures is not a thing yet. I don't know if it's something they're going to add, but I did check yesterday. It is not available. The platform is very limited in what you can do, what is available to you. As a beginner, that might be very appealing because you don't have all these extra distractions or confusion points. It is a very simple interface. And so, like I said, maybe that fits your style and your trading strategy. These are just the brokerages that we felt we could mention because we had some sort of experience with them. Mike, I don't know if you want to chime in here with your experience on any of these brokerage firms.
Yeah. Basically everything that's been said, I certainly agree with. Going back to $2,500 is a very reasonable starting point. Absolutely can be done for less. And if, out of necessity, by all means, just understand your mindset, because going back to what we said several episodes ago about trading mindset, if you start with a small amount, you're going to put a lot of pressure on that. So 2,500 and up kind of gives you that flexibility. So as it relates to these brokerages here, so I started, basically my trading life has been Robinhood, and TD Ameritrade. Robinhood fading into TD Ameritrade, and I can't decide whether or not I recommend Robinhood over TD Ameritrade, or I mean, and this is just purely from my experience because I don't have experience in these other ones. But the reason I'm struggling with whether or not to recommend it, is because it for what it is extremely accessible. It is, when I got into it, I didn't know any strategies. I didn't know what I was doing. I just knew I like this company. I want to buy their stock. And that's so they made that super easy. And in one way that was good. And in one way that's terrible. If you haven't, like, the one thing I would hope you get out of this entire series is, don't get into the stock market because you like this company or you think they're, Apple's sick and I love the iPhone, so I want to buy their stock. I mean, that's a thought process. And that's maybe investment mindset, like buy it and forget it. That's real, but maybe then Robinhood's not the thing for you. So that's why I'm struggling here out loud. But my time there, what things I can say for sure, because you're going to decide if it's right for you. Uber accessible. I mean, yeah, you download the app, you create your account, initiate a transfer from your bank. Well, after it verifies your bank. So, I mean, within a day or two, you're up and running, you're off to the races, money in the account. That's not to say anything else is slower than a day or two. That's pretty standard, I would say. But I did really struggle going into a TD Ameritrade, especially Thinkorswim. I mean, that thing is just a monster intimidator, that I struggled for weeks. And I mean, I am very proficient in software GUIs. I'm very proficient in bumbling around tools and figuring it out. And I mean, the first couple of weeks I felt just inept. I didn't know what the heck I was doing. And I just wanted to make a simple trade. And so truth be told, the first, I don't know, I'd say 3, 4, 5 months of being on TD Ameritrade, I just used the app. And the app is decent. But it's a very limited app, but it was the thing I was comfortable with. So, I would continue I like this stock. I want to buy this here. So, but the one reason I would definitely recommend TD Ameritrade long term is the app is good enough for your small nibbles and your little buy this, buy that. You can do the options chain and things like that from the app. But then you're already set up, you're already established. You will, if you go down this path in earnest, you will hit a point where you want to go deeper. And to me, I just like to be on the platform that I'm going to go long with and not mess with transition and this money's here and this money's here. Like, so that was ultimately why I gave up Robinhood and moved over. On the point of outages though, when I was on Robinhood was before meme stocks were a thing. And I mean, in the recent surge of this hype trend, I'm glad I'm not on Robinhood. I think it's very important that we distinguish an outage versus a circuit breaker event in the stock market, because things like GameStop and AMC and things that have just hype traded, the market is built to protect itself, or just protect volatility. So there will be outages, quote unquote, that may be perceived outages if something jumps and gaps. I think I don't know what the exact number is, but let's say 15% in a minute. It will stop, and all trading on all platforms will stop for that. That's not the kind of outage we're talking about. We're talking about, in the case of GameStop, there was never any conclusion. So speculative that Robinhood couldn't remain solvent. They were worried about going insolvent with how many people were trading in these massive quantities and the money that was going around. And so, much more so than other platforms, they had to kill and halt trading on certain underlyings, some underlyings that were adjacent to the action. So, the underlyings that didn't actually have any of this rapid volatility. And some of the underlyings they shut down, I was active on positions on in TD Ameritrade, and so that would have been very frustrating to have an adjacent equity halted when it's not running around. And so that's fine. I'm not here to litigate if they were protecting whatever they were doing it, and that's fine. But that's a thing to be aware of, and that's the kind of outages we're talking about. So um, Robinhood is very accessible. TD Ameritrade for me has been very stable and very once you get through it with Thinkorswim, it has been great. I still prefer my charting though. On a third party like TradingView is where I do most of my charting at. So it's perfectly viable. Maybe you chart on TradingView. The TradingView app is phenomenal. So there's a very real potential that the setup that could work for you is TradingView app, Robinhood, you chart, and then you go make your moves on Robinhood. Maybe that's the way you want to be super mobile. But for me, I'm on TD Ameritrade as well, and that was kind of how I got there and what my Robinhood experience was like.
That kind of brings
Now
us
you're
to the
clear.
end of the opening your first account episode. You got to find the trading brokerage that fits you. And maybe that's kind of a cheap sounding answer, but it's true. And most of these brokerage accounts really require little to no money to open the account. Um, and so I would highly suggest, just like I mentioned earlier, is write down the ones that you know about, the ones you want to consider. Um, do your own Googling to see what else is out there and kind of make your own matrix. Take your top contenders, maybe open up an account on each of them, download the app for each of them, and really see, does it have the stuff that fits your trading strategy? Because a lot of the brokerages that you go with are going to be a lot more in tune or a lot more tightly coupled to the trading strategy that you deploy. Interactive brokers, for example, with their low margin rates, those are going to be very focused on strategies that are scalping and day trading, because those type of strategies rely on leveraging margin to make their returns. Whereas, Tastywork and TD Ameritrade are more focused on, say, options trading. TD Ameritrade is more of a all around type of brokerage firm. So they, initially got their legs with options, but they do a lot of day trading and scalping in it as well. Whereas Tastyworks might be more of for option plays only type of trading. And it really just depends on you, your style, your strategy, and what fits you. I was kind of initially, me personally, uh, of the opinion, oh my gosh, this is the trading brokerage that I opened up with. This is the one that I have to stick with. And then I started looking around when the small exchange kind of came out, and I'm like, huh, actually, I can try any of these out for pretty much no cost at all. And I still actually have it on my roadmap to open up an interactive brokers account because I am intrigued by that platform. And that platform also has access to the small exchange. So that is something I personally want to try out. And it's pretty low bar to kind of open it up. If it works out, great. If it doesn't, shut it down and move on with life. Um, I will caution you that you probably do want to hone in on a brokerage firm to use for all of your trading because it makes a lot of your statements consolidated in one place. It makes a lot of your portfolio risk easy to see because all of your entire portfolio is visible to the particular platform. So I know for me, it is extremely frustrating to have a tiny chunk of my portfolio in Tastyworks because when I'm looking at my overall portfolio risk or my daily P&L or, whatever returns, I have to hop between two different interfaces. The way that the data is correlated is not the same. And there are lots of nuisances like that. However, in the exploratory phase of trying to figure out what best matches your strategy style, definitely I would say walk up to the buffet and try them all out. We are very fortunate to be in a place and time where that is actually very easy to do at nearly no cost to you. So I encourage you to please try it out, check it out, and see what best fits you.
Yeah, I just want to echo that sentiment that uh, the only reason I know that I have that view of Robinhood versus TD Ameritrade is because that's what I tried. I mean, as far as I know, none of these things, none of these options are charging you to open accounts. So in the exploratory phase, open it, move some money in. There's no fee if you're taking it out. All you're doing is just losing time. But again, this is a long game, so this time isn't. You're not missing millions of dollars or something. So find out which platform, which strategy works for you. But I definitely also want to echo the whole reason I gave up Robinhood, despite its accessibility and whatnot, was long term. I wanted everything under one roof as much as possible, or the simplification of tax statements and things like that. I just know mentally, investing, trading, I this is the one place for that. This is, you go through the list of, do I have everything to file my taxes? It's just much simpler that way. And then also, like Sprocket was mentioning, with the risk management, it's all, when it's all under one roof, I know exactly instantly, can I make this trade? Do I have to wait? Should I go close something? All that stuff. So, by all means, try away, but move towards settling on one. Certainly would be my advice.
So that brings us to the end of our mini series here on how to start trading. I hope you guys enjoyed it. Go back, watch them again. You might have missed something. We have a couple of new and exciting things coming to the channel. I'm not going to preview them yet. Just know that they're coming, and they're going to be pretty exciting to watch and to see. It's summer is well underway now, and hopefully you guys are enjoying the weather. Hopefully you're getting some good trading in there, and good luck this week. Have fun, and remember, think outside the block.